Good morning. Today is Wednesday, January 25th. The time right now in Singapore is 11:37 in the morning, and overnight on Wall Street has been how would I say it? It's relatively uneventful. We also saw a marginal increase in terms of the daily trading range. For Dow Jones, it was a marginal high at 33,782.9, but it wasn't that fantastic a move. So I think the market is just waiting for tomorrow's GDP fourth quarter release, and of course, into a big number, the market tends to be a little bit quiet. So the volatility will pick up at the moment when the data is released, which is going to be at 9:30 tomorrow evening. So in the meantime, the market will just be hanging on, consolidating. So this is very, very obvious. Over in S&P 500, we also saw a marginal high at 4,039.11, and then it pulled back a little bit. I think there's a bit of a light profit taking going on. So again, there is no major big move. However, the profit taking is a little bit more obvious in the Nasdaq 100. Market have a high of 11,918.8, and the market slide back a little bit. But on the trading range, you can see that there is a little bit of nervousness going to the GDP numbers tomorrow. So again, in Asia, the market is not open. So basically, we are not going to cover the Hang Seng or the Shanghai. We'll go straight into the Nikkei 225. We saw the market has come back again very robustly. We can see the Nikkei traded to a high of 27,465 this morning as we are speaking. So this is the highest you ever traded for this entire month, which is also the year's high so far. So it does look like unless something major changes, the dynamic changes, there is a possibility that this rebound that we are seeing is likely to extend even higher. Okay, so again, I'm having to say that this is just a technical rebound. It is not an uptrend. So the overall trend is still very bearish in my opinion. So this is basically a technical rebound. Over in currency, we can see dollar yen actually have a bit of a move. It went up to 131.11 last night, but it did not quite close above this falling trend price channel. Now, if you go back to the middle of the January, we can see on January 6 itself, the market have a marginal breakout above 134.80, but it did not quite close above this price channel, and prices subsequently went up to a low at 127.21. Okay, so this time it looks rather similar. The market actually punched through this resistance line, but never quite managed to close above it. So there's every likelihood that price may actually unravel, and maybe sometime either tomorrow or the day after, or maybe even as late as next week, this 127.21 may be seen one more time. Okay, so we have to keep that perspective alive. Over in the euro versus the dollar, we can see that the euro haven't seen a high of 109.27. Now market is back to 109 levels thereabout. Okay, this morning high at 109.02. Okay, so the market is flirting with 109 again, but I do think that market seems to be likely to trade the downside in the near the medium term. Okay, this is largely because the market, although is in a rising channel, is trading below the midpoint of this rising channel. So technically, it does have a little bit of a negative bias to the downside. So do watch out for weakness going into the trading itself. Now over in Aussie, we can see Aussie this morning have a spike up to 0.71 cents. And this is again the highest traded so far this year, and the market is getting likely to break out of this bear market, at least in the daily time frame. You can see that based on the daily time frame. Now I convert to the daily time frame. I'll show you the chart here. You can see that overall this market is very bearish all the way from April last year. Okay, so this bear trend has been in place for so long, and market only started to bottoms out sometime in October together with the rise in equity prices. So you can see that the price so far until 0.7138 is 37 is taken out. Okay, I'm still going to maintain the slightly bearish outlook until this level is taken out. So there is no reason to believe that the market is going to run away. So we will have to let the market tell us what it wants to do. If the market do take out 0.7137, then of course the entire structure here would have changed. It would turn from bearish to bullish, and that may also fit into the overall narrative of stronger commodity prices going forward. that also plays into the story about China reopening. So it looks like the relationship between Australia and China is somehow going back to on an even keel. So if China economy does started to rev up its engine, and it will need a lot of raw materials, and the most cost-effective place to buy those raw material will be iron ore or grains, it's definitely going to be more advantageous to buy from Australia, because logistically speaking, it's a lot cheaper than to ship it across the Atlantic, from anywhere in South America or even America itself. So if China open up, can actually stimulate the Australian economy, logic goes that the Australian currency should also benefit from this move. So I won't be surprised if the market turn from bearish to bullish in the currency here. So we have to watch this move. Now it's getting very, very close. So if you belong to that bearish view, whereby you still think, okay, the dynamics that has been reversed since last year is still very much in play, then of course you want to take a negative view on this. So in the meantime, what we can do is look for selling signal. There is no selling signal. I go down to the 1 hour time frame. There is simply no sell signal yet. Okay, what I would need is a very distinct sell reversal signal to actually appear, at least on the 1 hour time frame, before I would say, okay, this is a great place to actually take a short position, because my stop is going to be so near. I only had to put my stop above 0.7140. Okay, and based on where we are right now, it is actually very, very advantageous to go short right now, but I need confirmation. Right now, there's simply no confirmation. So to go short as the market is rallying is asking for trouble. So we wait. Okay, wait for clearer sign that the market is telling us that, okay, I think it has exhausted itself and we're getting ready to trade to the downside. So until such a sign appear, do not try to sell this currency as yet. Okay, it looks very, very strong right now. Okay, so the other currency that I think I will be very keen to actually take a short position is actually the Kiwi versus the US dollars. Okay, so but I do not have very clear-cut sell signal other than this one. Okay, on Wednesday itself, last Wednesday, the market actually traded a high of 65 cents and then pulled back very, very significantly. This is a classical reversal signal. Now, as the market has rebounded, it has tried to test this high one more time, but failed this morning. Okay, it has not quite be able to actually clear beyond 65 cents, 65.30 cents. Okay, 0.6530. So again, this level here is acting as some kind of a trigger point. Okay, if the market doesn't cross back above or close back above more correctly, then I think the downside is actually quite obvious. But there is no clear-cut sell signal at this moment in time. Unless you take this as a clear-cut sell signal, but it is not very, very strong in my opinion. Let's go down to the 1 hour and see if we can. Yes, I think we probably can use this as a trigger. Okay, this bar here that try to test the upper end of the euro, this Kiwi versus the dollar range, this high here may act as a trigger. So if we get a rebound today, anywhere in a 50% range, I think that will be very nice. Okay, that will be very, very nice indeed to take up a short position. I think let's see. Yeah. Okay, between these two levels here, 0.6895, okay, 0.65, thereabout. Okay, anywhere near 0.65 will be a great area to position short, because right now at this hour itself, we can see market is trying to rebound. So if this market can actually rebound to this bracket of prices and another reversal signal appear somewhere here, then that will be my cue to go in and sell. Hopefully that over the next week or so, the market will actually unravel. Okay, so this one does look like a better setup than Aussie dollars. Okay, so over in the sterling itself, we can see there was a very obvious pullback last night. Okay, the market right now is trading below the midpoint of this rising channel. You can see that this rising channel has acted very, very well in sterling. Okay, you can see on the way down, it took out this midpoint, and prices has not been able to close above it, and it has been trading largely to the downside. Then as the market broke out of this midpoint, it stays above for a couple of days, and last night it came back down. And if this midnight perform as what it has been doing for so far this year, then ideally the price should be trading to the downside. Okay, I've already gone short on sterling, so I'm hoping that you will further decline as the week progresses. Okay. Over in dollar versus Canadian, there's no obvious sign the dollar is bottoming yet, but it is consolidating. Okay, the key level here is $1.33. So if the 133 is not taken out, there's a very good chance it will end up as a rounding bottom. And if the market takes out this near-term support resistance line, there'll be further confirmation that the dollar has actually bottomed at 133.20. So it's getting ready to surge higher. Okay. Over in crude oil, we have a bit of a profit taking going on last night. Market failed to take out the $82.66, which is last week high. And last night it went up to as low as $79.66. But by and large, it still maintained a rather bullish outlook because the price has not taken out this near-term support line, as well as did not challenge this last Thursday's low of $78.45. So by and large, this is still very, very bullish in my opinion. So the market may still have a chance to go back to $83.87 at the least. Okay. Again, natural gas, we have not seen the market having a major move. Although the market has rebounded from $3.09, but let's say prices overnight has come back down again. If this $3.09 is not seriously violated, I think there's still a very good chance it may actually be looking to form a base. I think a base is a near-term bottom is very, very nearby. I have a sixth sense that a bottom is going to be very, very soon going to be in place very, very soon. Okay, so do watch out for natural gas. There could be some great trading opportunity developing in this particular product here. Okay, over in gold, gold remains very, very well bid. There is hardly any move to suggest that price is about to collapse. So the high of $1,942.51 was traded yesterday. And if you notice, there's this one bar here on a 4-hour time frame. Now, this is further evident that the market is very well bid. We have not only one, we have another one over here. So all these are what we call clear signs that the market is very well bid. Okay, there's a lot of buying orders below. So if in the face of this, it's very difficult to try to sell this particular counter. Try not to sell this because this market is in a very bullish mood right now. Do not stand in the way of this bull. Any pullback, if any, is actually an opportunity to actually buy more. Okay, not to sell. This is a counter that I think for time being, it does not warrant going against. Okay, you want to stay with the trend. Then the other one is silver. Silver, after this rundown on Monday itself, now is struggling because it has broken out of this trading range between $23.11 to $24.55. So the market is trading to a low of $22.76. So that caused a new paradigm. Market could be trading into a different structure altogether. For all I know, market could be drifting lower to $22.23. But I think the key level, if you ever go that low, I think the key level will be $22.03. This level is a leg that I think warrants closer attention. Okay. Over in cryptocurrency, we see a bit of a profit taking going on. Let's check out the Bitcoin. Now, Bitcoin, no, this is not Bitcoin. This is Binance Coin. Bitcoin has held up very stable. Okay, we have two leg here, one leg here. This is a 4 hours time frame. By the way, we have one leg that supported prices, and this morning, as we are speaking, there is another leg that's forming right now. If both legs tends to be able to support prices, then I think the market is building a base to travel even higher. However, okay, when we see the other coins are coming under profit taking, then we will maybe have to take a rain check on buying the Bitcoin at its current level. This morning, we had a sharper decline. I think there's a bit of a profit taking going on, and that's to be true because tomorrow we're going to expect the GDP number released for United States fourth quarter. So I think the market is just trying to take some money off the table, and that's actually quite normal. So do not take this as a selling signal. It is just profit taking. People who have gone long since the beginning of the year now want to take some money off the table. I think that is fine. That's a very fair move. And if the market does not take up $1,500, I think the market will be supported, okay, by this leg over here, okay, which is last Thursday's low, 1,593 cents. Over in Ripple, we also see a bit of a profit taking, but the market seems to be holding very, very well near the 40 cents level. 0.3962, 0.3972. So we can see that prices for near term have support around here. So again, the market is still maintaining a, generally speaking, a bullish tone. Okay, Cardano also have a bit of profit taking. Yes, the market took out a very, very minor support line, and this is obviously profit taking, not new sell order. I don't believe this is a new sell order. So be very careful trying to sell this coin here. The market appears to have some kind of support near term at 0.325, if not at 0.307. So between these two levels, I think the market should be supported. Okay. Over in Solana, the market also comes off a little bit, but again, it is very, very much having a very bullish tone undertone. Market is now flirting with the near-term support line. Unless it breaks out and close below it, then I think the losses could be well contained within current low. Okay, so there you have it. For today, this is all I have for you. Tomorrow we will have GDP numbers as well as durable goods for US. So do watch out for those two numbers. I think the market volatility will pick up upon the release of those two numbers. So in the meantime, take care and be safe. Bye bye.